our view is very clear. We think that the policy put option has been exercised across the key policy cohorts when it comes to monetary easing, fiscal policy stimulus, property market relaxation, and quite importantly, further deregulation in terms of sort of the industry tightening that we have seen over the past 2.5 years. Now, whether all these sort of policy easing measures, are they enough to get growth back to 6-7%? I don't think so, because next year we're looking for about 4.8% GDP growth, and that's already assuming that policy easing measures will come through in all the areas that I just mentioned. But I still think that policy will be accommodative going into next year. And when you think about where are we in the valuation cycle for the equity market and how investors are positioned right now in Chinese equities, we do think that the risk reward looks quite attractive from here.
Yeah, I see. I think you're looking at a price return 16% for the CSI 300 index. What do you think that will be largely driven by?
We think it will be largely. We can attack that question from different perspectives, but just from a pure returns driver standpoint, we think that earnings growth will be the key drivers for equity returns for next year for both A-shares and for the offshore equity markets. We're forecasting about 10-11% EPS growth for Chinese equities in 2024. We're slightly below consensus. We think consensus is a little bit too optimistic, but again, given where we are on valuations, we see quite limited downside on valuations. And if earnings growth comes through, then just riding on your earnings curve, then we'll get low teens to mid-teen returns. I think you don't really have to stretch your imagination to get there.
At a sector level, you're underweight China real estate and the banks. Does that suggest a managed or a disorderly default cycle?
Well, not so much from a default standpoint, but we just think about from a fundamental perspective. We think that the Chinese housing deleveraging process will take a few years to manifest and to play out. So over the next few years, we think that the housing market will continue to be a drag to economic growth, and that's why we need all this policy support to stabilize growth. And in that regard, property developers will continue to see quite significant pressures when it comes to cash flows, when it comes to sales, and obviously banks, which are quite sensitive to the housing cycle, we think we'll likely see more downward pressures on NPLs and on NIM.
And you've got 4.8% headline growth forecast for 2024. Sam?
Yeah, I mean, in terms of the macro rebalancing, you say it is underway. I'm curious where you see the opportunities in the market for investment.
Well, actually, quite a lot. And obviously, the narrative is quite cautious right now from an investor standpoint. But if you look into sort of the key economic drivers within the economy, for example, in consumption, we think that services will do quite well, given the output gaps that we are currently looking at right now are still quite negative compared to where we were before the pandemic. And in exports, now obviously China is facing a lot of headwinds when it comes to selling products to DM. But if you look at the exports going into sort of the emerging markets as well as the Belt and Road economies, it's actually rising quite rapidly. And when it comes to investment, property will be a drag, as I mentioned. But the so-called new infrastructure investment, I think that continues to be the bright spot within that cohort.
Kinjo, overweight China tech and services, is that on compelling valuation? And does it also imply that we've seen peak regulatory uncertainty?
Well, a combination of a few things. You mentioned two of them, right? Valuations being very low. Some of the large e-commerce platform companies trading at very depressed valuation from a historical perspective. On top of that, the regulatory tightening cycle, we think is the worst is over, and we'll likely see more accommodative sort of backdrop going forward. But importantly is earnings. As I mentioned, earnings will be the key driver for growth or for equity returns. And in fact, if you look at this year, the China internet sector is the only sector within the market that has received earnings upgrade.